Welcome. Let's take a look now at some of the events to watch out for us traders for the week starting Monday, the 6th of November. And after what's been a fairly busy week, it sees the foot off the pedal a little bit. But some of the data points that are coming through will be of more interest and more people would be looking at what's going on. Monday, it's relatively quiet. We've got the Bank of Japan minutes from not the last meeting, but the meeting before Japan leaving interest rates on hold. These meeting minutes are not massively of interest to the market, but it will be interesting just to see just what the wording is of the statement that was given at the time, but not released on when, if they do decide to start raising interest rates. That's going to be the main key to watch out for. Factory orders in Germany, bit of a backward-looking number. It's September release for that. That's Monday. Tuesday, one of the big swing points, I think, for the Aussie dollar. This is certainly an interesting area of the market for me. I've seen a little bit of an uptick for the Aussie against the US dollar recently. Some of it has been because we've seen a little bit of weakness in the US currency. But the Australian central bank meeting this coming Tuesday is going to be of interest because the new incumbent for the in the governor's role wants to raise interest rates. And that's flying in the face of what politicians want. So it's going to be a bit of a tussle. But I think she's going to get the upper hand on this. And I think we could well end up getting interest rate rise. So certainly that's what's being priced in now with market rates, another 25 basis points possibly to 4.35%. UK BRC retail sales monitor, Halifax house price index. Remember the nationwide last week coming through with its version of the latest reading for house prices across the UK. It ticked up a little bit against all expectations of another drop. Interesting to see if the Halifax mirrors that as well. Chinese trade balance numbers out, also US API crude oil inventories on Tuesday. Take a look at the midweek trading session. We kick off with trade numbers out in France, retail sales in the Eurozone, and in the US we get wholesale inventories. Take a look at Thursday the 9th. We get consumer prices in China. Could be an interesting number to watch out for there. We've seen inflation drop a little bit. Concerns are about deflation, I think, in the Chinese economy more than anything. Not there yet, but it's just interesting to see what's going on at the moment in the Chinese economy. Producer prices as well. And it's being a Thursday, it's the weekly jobless claims in the States. And we end out the week with another pivot point. This for sterling. We get our first look at third quarter GDP. Yesterday, we heard from the central bank, the Bank of England, to suggest that as at the end of the year, the BOE is watching for growth at 0.5%. Year on year, the number is expected to come in at 0.6 for the third quarter reading. Trade balance numbers out in industrial production, a lot of data out on the Friday morning here in the UK. And then later on in the day, Michigan consumer sentiment and Baker Hughes recount. Tony Batista joins us now from Tasty Live. Tony, welcome. It's been an amazing week, actually. Against all expectations, it has been an absolutely incredible week for the equity markets, but also for bonds as well. People buying back into bonds. We've seen yields down, I think, 4.7% now, which is, I think, the lowest we've seen since the back end of September. Can you explain more about what's going on and what's the takeaway for you from all this?
Sure. The Treasury is increasingly borrowing in short-term offerings, which has led to the 10 and the 30-year to sharply go higher. What does this mean? Well, the Treasury is betting on rates coming down in the long term. I'm not so sure, but that's what they're betting on. They're borrowing at a historic rate. It's getting very expensive. They borrowed $776 billion. They will borrow in the last 3 months of 2023 and 2024. They're expecting to borrow even more, $816 billion. That's about $1.6 trillion over the next 2 quarters of borrowing. I think the dollar's got to get a little bit weaker. Our U.S. dollar has to get a little bit weaker. It's kind of going in the face of everything that the Treasury is doing. We'll see if the market wins or the Treasury wins.
Just one question about these equity markets. I guess there's a link, isn't there, between the expectation of interest rates and the equity markets. I mean, this S&P 500, NASDAQ, Wall Street, Dow Industrials, it's been a really good week.
It's been a great week. Historically, this is the strongest, typically the strongest last couple of weeks in the market. It's been a historical time for the big bull market, the last run. Apple did have a little bit of a miss last week, down around $5 after earnings. That's a little concerning. It has become like a Dow stock. It pays a dividend now, for the last couple of years, and it's starting to act more like a Dow stock. Kind of lost that big alpha to the upside that it used to have and carry the market. I think the market's going to look for some more or different leaders in the coming year.
Yeah. Okay, look, Tony, we'll leave it there. Thanks indeed for joining us. Have a good weekend. That's Tony Batista there from Tasty Live. Let me just quickly run through some of the other areas of the market. Corporates out next week. As I said, it's a big, heavy week last week. This week it's a little bit lighter, which means, again, we can look perhaps maybe in some more detail at more of these companies reporting numbers. We kick off on Monday with Ryanair first half earnings. And then things start to get a little bit faster coming through on Tuesday. Here in the UK, we've got Associated British Foods and Persimmon. European continent, watch out for the Swiss bank UBS. And later on in the day, an all-session stock on the IG platform, Uber Technologies, on third quarter numbers. Marks & Spencer, one of the bellwethers of the UK High Street, reports first half earnings. Also got the broadcaster ITV on third quarter trading statement. Airbus earnings for the third quarter. Munich Re, the world's largest reinsurance company. We've had a lot of news recently about hardening rates within the insurance industry, and we're all paying more for it, of course, but it has helped a lot of profits coming through for the likes of Munich Re. Walt Disney lift on third quarter and fourth quarter earnings coming out on Wednesday. WH Smith kicks us off on the corporate calendar on Thursday the 9th. AstraZeneca, Deutsche Telekom. Just one quick word on AstraZeneca. It'll be interesting to see just what it says about the COVID vaccines. You remember what we've seen recently, a write-down of $1.3 billion at Moderna, the mRNA vaccine and company, and also at Pfizer, which was another big COVID winner during the lockdowns, and everybody's having COVID vaccines. Not so much anymore. It'd be interesting to see what AstraZeneca has to say on this. AstraZeneca is far less dependent on income coming through from that because it did send these out here in the UK free of charge. And on Friday, Allianz rounds off the weekly earnings on its third quarter numbers before the European markets get underway. And that's it for our quick look ahead to the week starting Monday, the 6th of November.